Good morning, traders. It is Friday, September the 6th. Taking a look at the charts, we got some pretty big price action going on again today. We just had a bunch of economic data come out, payrolls, unemployment numbers, and the markets are really starting to swing around. Overall, the stock market had a little tiny blip. It's recovered right back from the news this morning. If we take a look at the 30-minute chart, you can see we were in this downtrend, got overbought, pulled back, and we started to see this trend reversal. And then, of course, it's really taken off and popped to the upside today, set to gap higher, up around the 89 area. So pretty much near yesterday's highs is where it's set to gap open at this point. Still have a little while before the market opens, so who knows where it'll actually start. But overall, the market is pushing into overbought territory. Just know that we've had this huge this breakout from this resistance area. It has popped, and we've been looking for a breakout of this range in either direction. We were hoping for a break to the downside. It would have been really ugly, would have been great for us. But instead, the market has popped to the upside. It's just the way it goes. We were obviously wrong on which way it was going, but it doesn't matter. We traded all this and these positions pretty darn well. Very little loss on our SH, about a 3% loss on that play. But overall, the market popped and gapped higher. We do have around a 3,000 target, so we're not far from there. And the market did most of this in overnight trading. So the majority of us who are trading ETFs really miss the trade, and you jump into an overbought market. If you look at over here, we are above this red hashtag. This indicates the market is overbought, and we could see it pull back at any point. So we're a little long in the teeth here. Today's gap up could get sold into. Overall, we are looking for a new setup in the equities market, but not looking to buy something that has really had this strong of a move. We're looking for a pause or pullback before we do anything there. Now, we saw a huge move down in silver this morning. It was, if you look at yesterday's intraday chart, really it formed this perfect bear flag. Really went from this overbought territory, a flagpole, created the flag, and in pre-market trading this morning, it went all the way down to pretty much this green downside oversold target. So we actually saw price trading down here really just a couple minutes ago, and that's the halfway move. You got the bull flag, bear flag, and you get the reaction high, and then you get the second half of that measured move. Got down into oversold, and right now you can see on the daily chart we went from this oversold level. It's ripped back up with unemployment numbers, and actually let me just pull up the you might be able to see it. You can see here big sell-off all through the night. Sell-off this morning down, and then economic data came out. We're seeing a quick recovery. So a lot of volatility in the market. Don't get caught up. This is economic news, news-driven moves. We'll see how things shake out. Overall, the market has ripped to the upside. It's popped on this news, and as we know, whatever moves straight up or down on news usually gives most of it back. So I wouldn't be surprised if we see silver continue to flag around here. It was down 2 or 3% this morning. Overall, we were expecting some heavy, sharp pullback with gold to have the least amount of that move. Miners have taken it on the chin. Let's take a look at gold miners yesterday. Big move down, still within its big trading range. You could argue it might be putting in a topping formation here, like a head and shoulders. We've got a shoulder, we've got a head, we've got a shoulder. It's very well weighted, meaning the distance of each one is around the equal size. It's not like we have one long dragged out shoulder or anything. It's very well weighted. We got this neckline, and a rising neckline I really like, because when you start to break it, it creates a breakdown here, and then once you break this low, it creates another wave of type of sellers and a bigger selling, and then when you break this low, it creates even more stop orders to be triggered, and you get this huge flush to the downside. Typical target for head and shoulders is usually right underneath the head to the neckline. That distance is usually the distance for the breakdown, which would bring us down somewhere down over here to around this low, or this kind of support level, which more or less carries right across to this almost this previous low. So we'll see how things shake out over the next couple of days. A lot of uncertainty going on. You can see the trend for miners turned down yesterday, and still has a bearish formation. It was trading much lower this morning. It's kind of recovering with this economic news a bit, but again, all over the place, and sometimes it's best just to watch versus to get all wrapped up in these somewhat headline-driven market at this point. Let's take a look over at, let's pull up natural gas. Natural gas had this beautiful rally. We caught this whole move. We got out right near the top. It's consolidating, and it feels long in the teeth. I do feel as though seasonality wise it could do really well going forward, but we are looking for a little bit of a pause or pullback in price. And um, I think we're into this resistance area right here. So we could very easily see this pull back. Maybe it's going to just do a very tight bull flag. The 5-day moving average moves up. If 5-day moving average is a strong momentum move, it could potentially just pop and take off in a big way. But overall, something that goes almost straight up into resistance, I don't like to hold on to plays because a lot of times it'll come straight back down and you watch all those gains just vaporize. It's better to get in, take the middle money, wait for a new setup, and potentially get in at a lower level, a launch pad for it to start the next major leg to the upside, which is the game plan. Looking at crude, down 1.7% this morning. Crude is a pretty ugly chart. It's all over the place. Really trading sideways in this range. If we were to just box in this recent range, we'll just box it in right here. This is the recent kind of chop in the market, and whichever way it breaks is going to have probably a significant run. If it breaks to the upside, we'll probably head to the 60 to 62 upside target. If it breaks to the downside, I have a feeling we could very easily break this 51 level and actually continue to go lower. But right now it is total neutral, mixing, flip-flopping signals. All the moving averages behind here, there's a lot of just mess. It's just not a great chart at this point. No real insight for a really clean type of setup. Let's take a quick look over at the US dollar. The US dollar this morning or yesterday gapped much lower and then ended up rallying back, which is what put some pressure on metals. We actually ended up seeing it move higher, and we saw metals and miners really pull back. Overall, the dollar is flat today. It could very easily just consolidate. We'll see how things unfold, but overall, what the dollar does here, it's still seen as a safe haven. I think it's still going to kind of hold up all right for a little bit. We'll see if it forms a topping formation, and I do feel as though it's going to have a big correction at one point, and hopefully we can play the downside with an inverse US dollar ETF. Last but not least, let's just take a look at Bitcoin. Bitcoin is kind of flagging out here. We've got this potential big pennant formation right across here. Price has been consolidating. It's still contained within this big wedge, this pennant formation. Looks like it's on the verge of breaking out. We'll see which way it goes, but overall, this big pattern that we've seen run to the upside, if this continues on, we're going to see a continued big move. Let's just grab a Fibonacci extension, get an idea. If it goes from here, rallied to here, down to here, I'll squish price down. This gives us a target of where Bitcoin could run if it starts to break this pattern. So you've got your run up, you've got your consolidation, you've got your 618, and then you've got your 100% measured move. Brings us back up to pretty much that 20,000 mark where Bitcoin tagged in the past. If we were to just backtrack a little bit, I don't think futures go quite up there. Futures started, oh, there they go. So we could potentially put in a major double top formation. There is potential for this run. I do like it. I don't know a lot about cryptocurrencies, although it does have a very bullish formation and it is primed and ready for a big breakout. This type of pattern that we've seen right across here is very similar to this type of pattern we saw right across here. And this had a downward bias. At this point, because the price had broken down, it had a downward bias. This is a continuation pattern, meaning it's going to continue lower. At this point, we're rising and we have a continuation pattern, meaning they should go higher. So I do like Bitcoin going forward here. I'd like to see it more or less consolidate a little bit more. But overall, we'll see how it starts to unfold. It does have potential to the upside. The Bitcoin ETF is GBTC for anyone interested in an ETF or a fund that more or less mimics the price of Bitcoin. It's not 100% perfect, but it's pretty darn close and allows you to get into Bitcoin if you were to trade it. But I'm not looking to trade it right at this point. Anyways, that's it for this morning. Talk to you in a bit. Bye-bye.